You're sitting in the driver's seat, hands gripping the leather steering wheel. That new car smell is filling your lungs, and for a moment, everything feels perfect. You feel successful. You feel like you finally made it. But what if I told you that scent isn't actually new car? It's the smell of your wealth evaporating. Most people think they're buying a vehicle to get from point A to point B, but in reality, they're signing a contract that guarantees they'll stay broke for the next 30 years. It is the single most effective wealth killer in the modern world. And the worst part is, society has convinced us it's completely normal. Welcome back to Alex Talks Finance. Today, we're peeling back the curtain on the car payment trap that nobody talks about. We're going to look at the math that the dealerships pray you never calculate, the psychological tricks used to keep you in a cycle of debt, and the staggering amount of money you are flushing away every single month. If you've ever wondered why it feels like you're working harder than ever, but your bank account isn't growing, the answer might be sitting right now in your driveway. Let's start with a story about a guy named Mark. Mark is a hard worker. He makes $65,000 a year, which is a respectable middle-class income. Mark decides it's time for an upgrade. He walks into a dealership, eyes a beautiful truck priced at $50,000, and tells the salesperson he can afford about $600 a month. The salesperson smiles because Mark just fell into the first and most dangerous trap, focusing on the monthly payment instead of the total cost. The dealer stretches the loan out to 84 months. That's 7 years of payments. Mark drives off the lot feeling like a king. But here is what Mark doesn't see. The moment those tires hit the public road, that $50,000 truck loses about $5,000 in value. By the end of the first year, it's worth maybe $40,000. But Mark still owes $47,000 on the loan. He's officially underwater. He owes more to the bank than the truck is actually worth. And this is exactly where the trap begins to tighten. Now think about this. The average car payment in America has climbed to over $700 a month. For many people, that's more than their groceries, their utilities, or even their retirement contributions. We've become a monthly payment culture. We don't ask, how much does this cost? We ask, can I squeak by on the monthly bill? This shift in mindset is the greatest victory the auto industry ever achieved. They stopped selling you a car and started selling you a subscription to a lifestyle you can't actually afford. Have you ever heard of the 4-square method? It's a legendary tactic used by car salesmen to confuse you. They take a piece of paper, divide it into 4 squares, your trade-in value, the purchase price, the down payment, and the monthly payment. They move numbers around like a magician doing a shell game. They'll give you a great price on your trade-in, but they'll secretly jack up the interest rate. Or they'll lower the monthly payment, but they'll quietly extend the loan from 5 years to 7. By the time you sign the papers, your brain is fried and you've agreed to pay thousands of dollars in interest without even realizing it. But the interest isn't even the biggest problem. The real killer is opportunity cost. This is the millionaire math that keeps the rich getting richer while everyone else struggles. Let's go back to that $700 monthly payment. If you took that same $700 and instead of giving it to a bank, you invested it in a simple low-cost index fund starting at age 25, do you know what you'd have by age 65? Over $5 million. Read that again. That shiny SUV isn't just costing you $700 a month today. It's costing you $5 million in retirement. You are literally trading your future freedom for a heated seat and a backup camera.
Now, I know what you're thinking. Alex, I need a car to get to work. I can't just walk. And you're right. But there is a massive difference between needing a reliable vehicle and needing a rolling status symbol that requires a decade of debt. The trap is designed to make you feel like you need the newest tech, the biggest screen, and the most rugged off-road capability, even if the most off-road you ever go is a gravel parking lot at a grocery store. The cycle gets even more vicious when we talk about the trade-in trap. About 3 or 4 years into a 7-year loan, Most people get bored. They want the new model. So they go back to the dealer. The dealer tells them, hey, we can get you into the new model for the same monthly payment. It sounds like magic. But what they're actually doing is taking the $10,000 of negative equity you still owe on your old car and rolling it over into the new loan. Now you're paying interest on a car you don't even own anymore. You are essentially paying for two cars but only driving one. This is how people end up with an $80,000 loan on a $40,000 car. It is a financial death spiral. And we haven't even mentioned the ghost costs. When you buy a more expensive car, everything else goes up. Your insurance premiums spike because the car is worth more, your registration fees are higher, the tires cost more to replace, the specialized oil changes cost more. You aren't just paying the bank, you're paying a premium tax on every aspect of your life. So, how do we break the cycle? How do we escape a trap that is reinforced by every commercial we see and every neighbor we try to keep up with? It starts with a radical shift in how you view a car. A car is a tool. It is a depreciating asset. It is a toaster on wheels. You wouldn't take out a 7-year loan to buy a high-end toaster, would you? Of course not. You'd buy the one you can afford with cash. The wealthiest people I know don't drive the newest cars. They drive 5-year-old Toyotas or Lexuses that they bought used and plan to keep for 15 years. They understand that the goal isn't to look rich, it's to actually be rich. They let someone else take the massive depreciation hit of the first 3 years. They wait for that $50,000 truck to become a $25,000 truck, and then they buy it with a massive down payment or cash. Imagine for a second what your life would look like if you didn't have a car payment. Imagine having an extra $700 hitting your bank account every single month. That's a mortgage payment for some. That's a luxury vacation every year. That's the ability to quit a job you hate because you have a massive emergency fund. When you eliminate the car payment, you reclaim your most valuable asset, your income. Your income is your greatest wealth-building tool, but you can't build a house if you're giving away all your bricks to the bank. I want you to do something today. Go look at your car. Don't look at the color or the brand. Look at it as a pile of cash that is slowly burning away. Ask yourself, is this piece of metal worth my stress? Is it worth my late nights at the office? Is it worth the $5 million I could have in retirement? The car payment trap is invisible because it's so common. We see our friends and family doing it, so we think it's the only way. But normal in our society is being broke, stressed, and one paycheck away from disaster. I don't want you to be normal. I want you to be free. If you're currently in a high-interest loan, don't panic. You can't change the past, but you can change the future. Maybe that means selling the car, taking a small loss, and buying a beater for a few years until you get your feet under you. It might feel like a step back, but it's actually a giant leap forward toward a life where you own your things instead of your things owning you. The next time you walk onto a car lot and that salesman asks you, "What monthly payment are we looking for?" I want you to remember this conversation. I want you to look him in the eye and realize that he's not trying to help you, he's trying to sell you a cage. Break the cycle. Stop buying things you don't need with money you don't have to impress people you don't even like. Your future self will thank you for it. Stay smart, stay focused, and remember, wealth isn't what you drive. Wealth is what you keep. Thanks for listening to Alex Talks Finance. I'll see you in the next one.